Here's how to help your grandkids buy their first home. So a recent survey from Realtor.com and Census-wide found that 78% of home shoppers planning on buying a house within the next year think that they're going to be priced out if home prices and interest rates continue to increase. But they are optimistic. 88% of them still hope to buy a home, even though they think they're going to get priced out. So here's how you might be able to help your grandkids that are being priced out of the market right now buy their first home without you pulling any money out of your retirement, pulling any money out of your savings, or getting that dreaded question of, will you co-sign for a mortgage? Because all three of those options are typically not great choices, but grandparents are awesome, and so they often do those things anyways. But there is an alternative that doesn't require any of those three things, and that is to gift equity through a reverse mortgage. So let's take a look at what this would look like. So here's the scenario. Rick and Jenny, they're both 75, and they want to help their granddaughter Lisa buy her first house. And she's found her first cute little starter home. It's $380,000. And Lisa has been working hard and being frugal and saving her money, and she's saved enough to put 5% down. And she got a quote from her credit union for a 30-year fixed loan, and the payment would be $2,443 a month, which, even though she's qualified for that payment, Lisa feels like she would be stretched really thin to be able to make that monthly payment. She just feels like it's just too much to handle. She does not want to put herself in financial jeopardy to buy that first house. But Rick and Jenny are a little disappointed by that news, and so they want to help. And so they gave me a call to take a look at getting a reverse mortgage and gifting equity. And here's the good news, is that Rick and Jenny can help Lisa buy her first home because they own an $800,000 home free and clear, and they were planning on leaving the home to their granddaughter anyway. So why not help her today versus waiting another 10 or 15 years until they pass away and then leaving her house then? They might as well help her out today. And they really want to help, but they do not want to pull any money out of their retirement savings because they feel like they're going to need that for their own needs during retirement. And they definitely do not want to co-sign. They love and trust Lisa, but they just do not feel comfortable co-signing. The good news is that they understand the importance and value of owning a home. So Rick and Jenny, this is what it looks like. With a reverse mortgage, they'd have access to $316,000 of equity, of which $176,000 is available the first year. And so they decide that they're going to go ahead and gift Lisa the entire $176,000. And this is what their reverse mortgage is expected to look like over time. So the blue represents the home value, assuming a 4% appreciation rate. The orange represents the loan balance, and we can see this loan balance is increasing over time because we are assuming that Rick and Jenny are not going to make a monthly payment towards the reverse mortgage. And because they're not making a payment, the interest and mortgage insurance gets added to the loan balance. They still have to pay their property taxes and their homeowner's insurance. The green, we can see they're starting off with this, is a line of credit. And initially it's $138,000 because after they pull out the $176,000 and lump in the closing costs, they're left with a $138,000 line of credit. And we can see this line of credit is growing over time as well. And that's because any funds available in this line of credit are growing at the current interest rate plus 0.5%. So there's just more and more for Rick and Jenny to borrow from at some point in the future. Now, there's more to this than just what I'm showing you, and so I wanted to show you a couple different other scenarios. So this is a part of the amortization table that Rick and Jenny received, and you can see I've highlighted year 4 and 5, and that's because there's some other options here. Towards the end of year 4, Rick and Jenny could literally pull more money out of this line of credit, gift that money to Lisa, and Lisa could pay off her house. How awesome would that be? Lisa then could take that money. She could max out her 401k. She could put more money away for retirement savings. It just changes the whole dynamic of Lisa's life, which is awesome. Or another scenario is, let's say Lisa got married during that 5-year period, and her and her husband had a child, and they need to upgrade out of the starter house into a bigger house with a bigger yard and things like that. And so at that point, Rick and Ginny could pull out, let's say in year 5, $191,000, gift that to Lisa and her husband for them to purchase a new house. And what's even cooler is, assuming that Lisa qualified and she wanted to, she could keep that starter house as a rental. And what a great way for Rick and Ginny to create a lot of stability and assets for Lisa and her husband and their new grandchild. So, or I guess their great-grandchild. So this is, again, a lot of different ways that the reverse mortgage can be used to help your grandchildren really get a solid start in life. So back to Rick and Ginny's scenario. By gifting that $176,000, Lisa's mortgage payment goes from $2,443 to just $1,250 a month. Now, that has a massive impact because prior, Lisa didn't feel comfortable with that payment. $1,250 is going to be easy peasy for her, right? Over a 15-year period, her home is expected to appreciate $380,000 from $380 to $684, assuming a 4% appreciation rate. Lisa, during that time, would have paid her loan balance down over $50,000, and she's expected to have $546,000 in equity. And owning gives her a lot of stability and security that renting does not. So by gifting with a warm hand, Rick and Ginny are able to have a huge impact on Lisa's life and what the rest of her life is going to look like. Now, this last point, I think, is really critical because let's make the assumption that 15 years at the age of 90, Rick and Ginny have passed away. And just like they had planned, they leave their house to Lisa. Lisa doesn't want their house, so she sells it, and she's expected, based again on the amortization tables, to net over $800,000 of equity when she sells, which is awesome. What's interesting is that's pretty close to the same amount had her grandparents passed away 15 years earlier. So again, based off of the numbers, Rick and Ginny are still are expected to leave Lisa a significant amount of equity. Plus, they helped her earlier by helping her buy a house, potentially another house, helping her get a rental. I mean, there's all kinds of ways that by gifting that money, that Rick and Ginny have had that massive impact on Lisa's life. So you want to see how this would work for you and your grandchildren? Give me a call. Happy to put the numbers together for you, do the forecasting, answer any questions that you have about the reverse mortgage and if this would make sense in your situation. Give me a call. There's no cost to speak with me. There's no obligation. I'm just happy to help and see if this would work for you. Give me a call, and I look forward to speaking with you. Thanks.